When you purchase a new home, the process can be complicated, but it's actually pretty simple. It all happens in stages, and there's a lot going on behind the scenes. Ever wonder how it works? We start by pulling your credit report. This is the first step in getting a pre-approval. We'll have a quick conversation, and you'll provide your trusted prospect loan officer with some preliminary documents. Next, we'll review your credit report and loan documents. If you qualify, we will issue a pre-approval and let you know the loan amount you qualify for, so you can shop with confidence. Now it's time to start shopping for the right home. As you compare home prices, if you'd like to get an updated payment quote, ask your trusted prospect loan officer. After you've found the right home, you'll put in an offer. If accepted, it's time to complete your loan package. We will finish the details and gather up the rest of the documentation. Once we have everything, your loan will be submitted for processing. You'll get initial disclosures by email immediately after your complete information is in our system. We'll work directly with your agent on the details throughout this process to be sure you close on time. The property appraisal is next. You will need to provide your credit card information for the appraisal to be ordered. And now is a good time to start looking for homeowners insurance. When the appraisal is received a few days later, your completed package will be submitted to our underwriting department. If your underwriter needs further documents, we will let you know right away. Expect approval usually 2 to 3 business days later. When your agent says the transaction is ready to close, you'll be contacted for a signing appointment, and you'll soon be enjoying your new home. Have more questions? Don't be afraid to ask your trusted prospect loan officer.
Hello, my name is Nick Rossington, Director of Financial Services at the Buy-to-Let Mortgage People. Today I'd like to talk about mortgage finance because one of the questions I'm always asked is how easy is it to get a mortgage? I think what we are finding in the marketplace, clients are looking at lending, at bank lending and thinking it's very difficult to get a mortgage. Well, actually, for the right people buying the right properties, finding mortgage finance is actually relatively easy, and I'll just go through a bit about the criteria and a bit about the background of mortgage borrowing. Well, if we go back 4 or 5 years ago, before the credit crunch, or even at the time of the credit crunch, what we were finding is that lenders tended to look at buy-to-let as being a business venture, and as long as the rental income more than covered the mortgage payments, then as long as that stacked up, they were quite willing to lend. Now, as a result of the credit crunch, of tightening on lending, what lenders have done is tighten their lending criteria, and they've made it more, I think it's more akin to residential lending, insofar as they want to see clients who have got a track record in employment, they want to see a good credit rating, and also they need to see that that the property stacks up, i.e. that the rental income is going to more than cover the mortgage payment. So for the right client, there are mortgage deals out there, and I think I look at the benefit and look at how strong the sector is when we look at other forms of lending. So if any form of business, to go to a bank and say, well, I want to borrow 75% of a certain price, then lenders are going to need to see a really good business plan, a really good venture, etc, etc. Whereas for buy-to-let, because property is such a strong sector, as long as you've got 25% deposit, as long as you have employment history, as long as you've got good credit, and as long as the rental stacks up on the property, and the property is the right property deemed by the lender, then actually getting property finance to purchase that is relatively easy. And I think that really does show how strong the sector is and how comfortable lenders feel with lending on buy-to-let properties. So just for a client, what we do look for when we are doing our initial mortgage, fact-find mortgage discussion with clients, is that we need to see proof of residency, so you live where you live, proof of identification. Once we've seen that, we also need to look at employment history. And I think what lenders do need to see is that if you're an employed person, you have 3 months employment history, and they want to see the last 3 months wage slips. And often the last 3 months bank statements showing those salary payments made into the bank account. They want to see a good credit history. If people have got slight blips on their credit, then please talk to us. It may need getting an Experian report or Equifax, but we can talk you through that. And as long as then the 25%, minimum 25% income. And I think when we say that, minimum 25% deposit, as long as you've got a 25% deposit, then you do have access to most of the deals. The higher the deposit, what you will find is that you get the lower the rates available, and the wider the choice of deals there. But up to 75% loan to value with a 25% deposit, then we do find that we have quite a wide choice. You get any more than that with only 20% deposit, then there's relatively few lenders that will lend, and the mortgage rate's that much more expensive. So in summary, is lending difficult? Well, no, I don't think it is. I think the lenders are very, very keen to lend. We're seeing more mortgage products coming out. We're seeing more lenders entering the market because it is a very buoyant market. It's a very strong market, and rental demand is at an all-time high. For the right clients, as long as you meet the lender's criteria, then there is no difficulty. They do want to lend to you, and we will be able to search the market to try and find the most appropriate deal for you. Anyway, my name is Nick Rossington. I'm Director of Financial Services. Please call me on 01522 503 710 or email me on nick@buy-to-let-mortgagepeople.co.uk or visit our website www.buy-to-let-mortgagepeople.co.uk. Thank you.
Hi, today's topic we're going to speak about is construction lending and the capital stack. Hi, this is Todd Tretzky of CRE Finance. Today we're going to be talking about new construction financing and the capital stack. But first, if you're looking to apply for a loan or want to see some of our recent transactions, please click below. Now on to our topic. New construction financing can be very complex. Today we're going to talk about how to get your highest loan to cost and how to bring in some equity to have less money out of pocket when purchasing. At CRE Finance, we pride ourselves on being able to go as high as 85% on the loan to cost. What is loan to cost? That means we're lending 85% of what the cost of the construction is going to be. There are many organizations out there that provide equity financing for the other 10 or 15%. So yes, you can build a shopping mall, a multifamily project, or maybe your dream gym with no money down. But in order to do that, you need someone that understands the lay of the land. With over 30 years of experience, CRE understands that and can help guide you to achieve your lifelong dream. The most important part of the new construction financing is CRE will get you the 80 to 85% loan to cost, which that is your first mortgage. CRE Finance will also introduce you for an example which we just did for an investor out in San Diego building an assisted living facility. We introduced him to a fund in New York City that did EB-5 financing. EB-5 financing, just briefly, is foreign investors that invest more than $500,000 into a real estate project in the United States. The reason they'll do this is because that gives them green card status. But call me, we'll go into much more detail on that. But that is one, there are regional centers all throughout New York and New Jersey that are approved by the SEC that we can get the financing for you on the other 20% part. So you have an 80% first, a 15 or 20% second, which now allows you to construct whatever you'd like with very little money out of pocket. Thank you for viewing. If you have any questions, please feel free to call or email me. If you would like to schedule a meeting in person, over the phone, whatever you would like, again, just please pick up the phone and someone from CRE will come out and go over the complex structure of commercial financing. Thank you. Have a great day.
I'm Aaron Hall, business attorney in Minneapolis.
Hello, this is Mark Santee from the law firm of Thompson Hall, Santee, Cerny, and Dooley. I'm a business attorney here in the Twin Cities. I'm here today with Lauren Johnson from American Mortgage and Equity Consultants. How are you doing today, Lauren?
Very well, even though it's 3 below outside. It's very nice and warm here in the room, so thanks for having me.
Well, thanks for being here. Today we were going to talk a little bit about what you do. So if you could give us your background and how you got where you are today.
Well, very simply put, I work in the mortgage industry. Most people know what happens in the mortgage industry. I either help people buy homes or refinance the home that they're in. The bigger trick nowadays is you need to be state licensed or federally licensed. You have to show some competency and take a test, which I've done. But it's more to know the types of available products that are out there to help people. 10 years ago, it was real simple. We'd work with a bank, try to find the lowest rate, and that's all we needed to do. Now, it's much more complicated in terms of if it's the first time you're owning a home, there's money available from the state of Minnesota. There may be money available from a city or a county. There's also ways, if you're looking to refinance your home to get today's good interest rates, and you've paid your bills on time, you have great credit, but because you may have bought your home toward the height of the housing market craze 4 or 5 years ago, it might be that you owe more on your home than on paper someone says it's worth right now. There are different programs, both government-sponsored and state-sponsored, that can help people in those situations that have decent credit to refinance. For people that don't have really good credit, there are lots of programs. I am not a credit specialist, but having done this for the last 11 years, there are certain things you can do to help people with their credit scores, help them through the maze of talking to credit bureaus to try to get their score not only good enough to buy a home, but in today's market, as you probably know better than I do, Mark, credit scores can be important to your job, to future earnings, to lots of things besides just buying a home.
Right, and one of the things I do, I'm interested in personal finance, and I like to help clients who are having financial difficulties. It's obviously very prevalent today, even in 2013. As the economy starts to pick up, it seems that an anchor that people have weighing on them is still their house.
Right.
They're underwater on their house, or they're not taking advantage of the low interest rates. Now, why typically people would go to their real estate broker first, it would seem. How can you help them in a way that a real estate broker couldn't?
Well, I guess I'll break that apart into 2 responses for you. If someone's looking to purchase their new home, it never hurts to get to talk to a real estate professional first. A realtor, it knows an area, knows a market, but their specialty is in helping find a home, negotiating the proper price for that home, and assisting that buyer in every way possible to get them into a home. My specialty is in helping with the bank financing of that loan. I mean, for almost all people, a home that they buy is the biggest financial investment or financial transaction they're ever going to make.
Right.
So in dealing with, like I mentioned, dealing with the bank or dealing with the intricacies of qualifying for the best possible loan, do you put 3.5% down as a minimum down payment, 5%, 10%, 20%? Those are things that I help with that a realtor may not have necessarily the knowledge or the time to be able to help with, not because they don't care. Realtors are very good people. It's just that their specialty is helping people into the home. My specialty is helping to finance it. The other way to answer the question, though, that you mentioned is when people feel like their home might be an anchor. A lot of times, as you mentioned, it may be a job loss, an unfortunate medical condition. It could be a death in the family. Lots of different reasons why. In those instances, a realtor can help in terms of putting a house on the market to sell, but again, doesn't necessarily deal with the banks in terms of finding a true value, or again, so you sell the house, where will you go to live? You know, those are things that realtors can help with, but I can help from the financial end determine very quickly what can you do and how can you do it, so that between myself and the realtor and the customer, we can formulate a game plan that we're all on the same page. Because in any situation like that, we're on the same page. And if they're involving you and your services, it would be the same thing. It's how do we all get on the same page so we achieve the same end game? Because there is the only end game that's right is the end game for the customer. And I don't say that because it sounds nice, but it's true. I mean, at the end result, we want them in a home, and a home that they can afford, and a home that they like. And we're all on that same page, you with what you do, a realtor with what they do, myself in the mortgage business.
Good. I understand that the laws are changing a little bit in this area, or the requirements. I believe they're the FHA requirements. Could you talk a little bit about that?
Right now, currently, with FHA, it's the easiest way for a person to get into a home, in that their credit requirements are a little bit looser than what we call a conventional loan. People hear the words Fannie Mae and Freddie Mac. Those tend to be called conventional loans. An FHA loan is a government-sponsored loan, goes all the way back to the early 30s, and the Federal Housing Authority is where the FHA loan actually started. But you only need 3.5% down, the lowest possible down payment unless you're a veteran. And it also allows you the opportunity to get into a home with a credit score that may be less than what a Fannie Mae or Freddie Mac loan would be. The reason they can afford to be a little more lenient is because they charge something called mortgage insurance. That mortgage insurance basically insures the lender in case of a default or a problem with the loan. Currently, that mortgage insurance, once someone owns 22% of their home on paper, so equity we call it, once they have that, or they've been making their payments on time for at least 5 years, mortgage insurance can go away. You don't refinance, you don't have to fill out a new enrollment, it just goes away. With the new FHA requirements that'll be starting here this spring, mortgage insurance never goes away, and the cost of that insurance goes up. Now, when they say it only goes up a couple of cents, that's true, but a couple of cents per thousand on a $150,000 home every month adds up very quickly. So for a lot of people, again, it's a question of not only how cheaply can they get in a home has always been the question. Now it's, when's the proper time to get into a home? Is it better to get in cheaper with FHA, knowing full well that you may be paying mortgage insurance, which is tax deductible, but it's an extra expense? Do you want to continue paying that? Is it better to maybe wait a couple of months and be able to afford a conventional loan? And again, putting that game plan together.
That's a lot to think about, and it sounds like your services probably pay for themselves in the long run. Like you said, buying a home is a major investment, probably one of the biggest investments in a person's life. You know, I think it's great that they take an active role in purchasing the house and seek out professionals like yourself. Why don't you tell folks where they can reach you if they're interested in your services?
Easiest way to reach me would either be on the internet. You can go to my website address, which is www.loren, L-O-R-E-N, knows, K-N-O-W-S, mortgages.com. You can email me at Loren, L-O-R-E-N.Johnson, with an O, at amecinc.org, or you can call me, 651-226-4363. That goes directly to my phone. It's a cell phone. It's always with me. I answer my phone until 10 o'clock every evening.
Well, thanks a lot, Loren. I appreciate you being here today.
Thank you, Mark,
thanks
very
for
much.
watching. I'm Mark Santi with Thompson Hall, Santi, Cerny, and Dooley. Thank you.